Hello and welcome to another update video about Bitcoin. Yeah, unfortunately Bitcoin retraced more than expected. However, I told you that if we drop out of this support level here below 21.1, that we will then come down to 20.9k or 20.8. Let me just double check that. That was the 61.8% fib level. So this is currently what is happening. So from the low here to the high, we looked at the Fibonacci retracement levels. I assumed this was a wave 3 in green. We're coming down in wave 4 in green. This is still valid, even though it's now getting unrealistic. So I'd rather say this is not a wave 4 anymore, and we get to that in a minute. So from here I told, yeah, I believe it was the, let me just double check that, wave low here to the high. Yeah, we talked about the 61.8% fib level at 20.8k. This is pretty much where we came down to before this video. Before we broke out to the downside, I made the channel members aware on the signals channel that we were still in the wedge, but if we break it, we'll probably go down to next support at 20.8k, and this is where we landed. Now, at the moment, the current wave count is strictly speaking still valid. We can still count it here on the Bitcoin chart as a 1-2 and a 3-4. Now, the wave 4 is quite deep, quite strong. Well, on the other hand, if you look at the wave 2, which is actually quite a short wave, it could really be that the wave 4 indeed is a stronger one. That happens sometimes if wave 2 is quite short. And we did not yet get into the price region of the wave 1. This is what we should avoid. We should stay above 20,740. Until we break that, there is still the possibility for a recovery here, and that this is only a fake out. I mean, we're currently on the 4-hour chart. We haven't closed the 4-hour below the support level that we had on the chart. However, we don't really see a lot of a strong bullish reaction. So the way this is currently looking like, I think there is high risk that we are going to lose the wave 1 high now. If we do, then I would assume that this wave 3 was never finished here in green, that we have another layer of waves, that this here was another wave 1. So we have already a series of wave 1s here. We have this as a wave 1, 2, 1, 2, 1, 2, and this will be another 1. And then this must be a 2, because if we retrace too much, this is what we have to go with. Yeah, this would be another 1, 2, and this would remain valid until we go below 19,757. Now, this is the bullish scenario that I already showed you a few times. This is not my primary expectation. I still have to repeat that. Yeah, I have to repeat that until we go above this resistance level of 23.3k, the bearish one will still be more likely, because we just have not broken key resistance level. We haven't broken this yet, and above that level, it will, in my opinion, get more likely that we're actually in the bullish scenario. I mean, we haven't even broken this red zone really. We broke it briefly, but we haven't held it. So we didn't hold previous support, which is not great. Yeah, which means we have to either wait a little bit longer until this plays out, or we are actually in the bearish scenario, which I don't really like, but we might have to be, we possibly still are, and have to wait for lower lows to play out before we can see a recovery. But even if we see once more lower lows, which I guess would be good for everybody, because then we can all buy it back cheaper, the scenario here would be that we will need only one more lower low then to finish all of this off. And we're going to take a look at the bearish scenario in a minute. And also, I'm not telling you that above 23.3k I'm definitely going to make the bullish one my primary. It depends on the chart structure, how it, if we still see weakness in the chart, I may not do it. I may not make it my primary expectation. So we need to be careful here. All we do here at the moment is exploring the case of having the low already in, and unfortunately with this additional dip here, it has become a little bit less likely that we're actually in the breakout formation, because it just shows the weakness in the chart. And ideally we would have wanted to see a 1, 2, 3, 4, 5 to the upside. Here I gave you that green area in which we also came into in the retracement. It would have been ideal to get into this area and then start from there, and it was a relevant area. As you can see, we retraced into it. we saw a bit of up and down. The market tried to find a way to get out of this, but it dropped to the downside. So still possible to be in the bullish scenario until we drop below that 20,740 level or 30 level. But with that move down, it has just become less likely, because if you look at the chart, a 1-2, another 1-2, another 1-2, another 1-2 is just super unlikely. It's, I mean, on the other hand, you can understand why it's happening, because a lot of the bears are still selling into the rally. Yeah, and whatever they have done in the last few weeks and months in that whole bear market, any rally they sold into, they still do it. Yeah, and it takes time to change that behavior, to change that sentiment if we are in the bullish scenario. So let's take a look at the bearish one as well. The bearish scenario still remains the primary expectation for now. Again, here, similar situation. We moved down in the wave 1, moved up in a 2, came down in the 3. We now are still in the 4 in the bearish scenario, and we are moving down in the 5. So I told you, if we get above that 23k level, it will, in my opinion, get less likely that this still is a wave 4. But for now, we are still in the wave 4, or have maybe already completed it based on the bearish scenario. The bearish scenario has not been invalidated. In fact, if we take a look at the Fibonacci retracement levels, yeah, I gave you before here that 23k level as ideal retracement level. We came to it, we haven't even touched it yet, but this is a key level, 23k. And if we go above that, again, it will get a little bit less likely that this is the bearish scenario, but we can draw this channel here. And based on this channel, we have not broken this channel. So this, again, is sort of looking like a bear flag as well. And when we came to this resistance, which I made you aware in a previous video, we saw a strong reaction to it, as you can see here. And it starts to unfold quite strongly to the downside. So yeah, again, as I said, as long as we're holding this swing low there at 19,000, I believe it was 700, we can still make it work in a bullish scenario. But again, it has just taken another turn. It has just taken a little bit longer for the bullish one to work out. And if not, then it is what and it is unfolding as primary bearish scenario. Yeah, and especially when we see this breakout of this one here to the downside, which would be, let's say that happened today, we would be at 19,400 roughly. If we break out of this channel to the downside, then I think it will get very likely that we actually are in the bearish one, or even more likely, especially then if we also lose the wave X low here at 18,700, then we can go down to 17,600, and then we will approach the next key support, and that is the 78.6% Fibonacci retracement level. Absolutely key support for Bitcoin. Here we could have another chance to then reverse to the upside. So for now, this just is the primary expectation. Yeah, it has to be, even though I am actively investigating the case for a bullish breakout to the upside, because we can, yeah, because we have not made lower lows since the low from the 18th of June, and because we can count impulsive waves to the upside. Unfortunately, that retracement to the downside has just made it a little bit less likely. And therefore, we still follow, as a primary expectation, the bearish one. Hopefully that was clear. Hopefully you like the update about Bitcoin. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.